Hi, welcome to the Market Alert for Thursday, the 1st of August 2019. So it's all over, the show's over, and it wasn't what the market wanted. And as you'll see from the headline here, Trump slams Fed after market meltdown. As usual, Powell let us down. Strong words from Trump, but no surprise there. So Trump's been out tweeting following the market's reaction. Let's just have a look at this. The Fed decided to, I'll find it, there we go. They only dropped by 0.25%, and the market didn't like it. It was expecting more. So it was all quiet beforehand, and then as the announcement came out, you'll see here the market's reaction was not what I was expecting. They were really disappointed. They wanted 50 basis points. They didn't get it. And then to add insult to injury, Powell then made a statement saying that he didn't see this continuing going forward, which then the market, as you'll see here as we get to his statement, this is the line here. This is when he went live. And then you will see the market's reaction, which you already are aware of, but you got the potential sell signal there. He then makes his statement saying this is not setting a precedent at this time, and the market sailed to the downside there. And then eventually the plunge protection team coming in and assisting and bringing the market back before the close of the session, and then just dipping down a bit there. So let's have a look and see how things are overnight. So overnight prices have managed to find some support, no surprise here, and have moved back towards the upside there, you can see, but rounding over a bit here at the moment as prices are moving back towards the downside there. In the daily chart, what I'm looking for here is this. And I tell you what, let me go to the implied volatility first and show you what the reasoning behind why I'm going to look for in the daily chart. So in the implied volatility, this is the one that I've come up with the average line in it. And as we saw over the last couple of days, the market has crossed the implied volatility line, and I've changed this to amber. And now we're in red, and the reason for the red is quite simple, because we've closed below the 20 bar moving average as well. Does it mean that this will move lower? Who knows? But one thing you can do is actually gauge if the market bounces from this level, what it's likely to do. And then here you'll see also what I've also done is if you look at the 1129 area, and then if we just move this up to measure, again, another observation I found, because if the implied volatility doubles in a down move, the market will find a temporary stop. Doesn't mean to say it will reverse from this area. There are a few other things that you need to add into the mix. It can bounce and then go down further. You get these waves of implied volatility, which I wasn't aware of before, but are great to actually indicate what the market's likely to do. But the starting point is that this was the high that was left behind. It's the all-time high in this case. We closed below the 20 bar moving average, and when the market was at the all-time high, the implied volatility was at 1129. So what I would be looking for here is the market to go to at least 23 to show any sort of down move, stopping as a first point of stopping first wave. So we'll keep an eye on this. Say it's observations at the moment, having been through at least 60 or 70 charts over the last 10 years looking at this relationship. But it's certainly fascinating to see this unfolding in real time. Now, if we go back to the daily chart, what I would be looking for here is a bounce. That's what I'm looking for. You can see there the market coming through the 20 bar moving average. And now I will be looking for this market to trade back, go from the recent high to the recent low, and fail at this level. That would be the ideal situation to look for. However, prices could quite easily just do this today as well, and in which case then intraday you can buy the rallies inside of that. But in the bigger picture, stepping back. Watch for this area just in case prices do bounce back and they try and bring it back. So it'll be interesting to see over the next couple of days how this will react to what the Fed's actually done. Meanwhile, in the pound, this continuing to move lower. A bit of a bounce yesterday. You can see that there, and then overnight the market moving lower once more. What's also fascinating is the UK stock market hasn't sold off following this drop in the pound. That all seems to be holding quite well, but the pound under pressure, which it makes sense if you were part of the Project Fear, is mark the pound down, because that impacts more than the stock market moving lower. And the market on the overnight for the pound sort of sideways to lower there. In the Bitcoin market, yesterday we spoke about the market being able to move higher. It did yesterday. You can see this in the 4 hour, and then in the 15 minute it started to look a bit smoother, and then we got a few spikes, but overall the market moving to the upside after it's found support down here at the 200 bar moving average. Crossing back above this, it's managed to maintain an upside trajectory there for yesterday. However, the market's looking a bit weakish overnight, and could remain in a sideways move that we're starting to see develop here as the market has corrected following the move up from December. Okay, that's it. Let's see how the Dow gets on, particularly in the pre-market session. We could see prices moving back towards the upside, as was the usual pattern that we've had, where they'll move all the way back up, and then in the main event we'll move back down as the cash market comes on stream. It's very easy to move the market up in the futures market because nobody's offloading their shares in the cash market from 2:30. So we'll see what happens at 2:30 when the main market opens. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.